All right, let's jump into it. It is time for the weekend wrap, and it is 1:07 p.m. on Saturday, the 21st of March. So we're coming into, is this going to be the last trading week? There's probably a couple of days extra coming through. Yeah, so a week and a bit left. So 7 days left, trading days left of the month. But wow, what a week, what a week. So I'll start off with gold because metals have definitely been the place to be. And this was an incredible week here. So we just try. So there's a problem having 50 different charts of all this sort of stuff. Sort of finding which one we sort of used last week. I think this may have been the chart. Let me find again. I think this is maybe it here. So let's have a look at where we were looking at for the week. So this is basically, obviously, a little bit more of a trimmed down sort of version of it all. We could see that obviously this thing, once it sort of picked up, so it had a little bit of that consolidation sort of coming into sort of Monday, Tuesday. And this was the sort of the indicator, in my opinion, because I was looking at gold, I was looking at the dollar, and, you know, as I said, all of a sudden, it's got like a 90 to 10 sort of like, relationship in the sense of 90% of the time they'll run inverse, 10% of the time they can run together. And when you sort of see these moves happening, as in, uh, you know, the dollar was weak into the start of the week, and metals were just not reactive. Metals at best, they were just holding place. So what happens then when the dollar does move? Well, boof, this is what happens. Because, there's a portion of the market that's already sort of, selling gold, but there's just no buyers. And you'd expect, while the dollar's being sold off, that sort of rotation of capital out of the dollar into the metals, and we weren't seeing that. And so basically, sort of with the lack of sort of buying pressure here, at best it was just holding steady, because people obviously just selling the dollar. But once that actually picked up, woof, what an absolute sort of trolloping this thing got. Now, it did obviously close quite bearish into the end here, but I think there's a couple of things to unpack with this. And if we sort of clean this up here a little bit, just so make it a little bit clearer for us, we can sort of see that obviously, look, if we take this as in three moves, then one here, then larger sort of consolidation, and then the move down to this section over here. So this takes a little bit of extra drawing, but we can see that in the grand scheme of things, let's make this a different color, make it a bit more down like a red, bang. We can see that sort of obviously at the moment we had that last sort of, well, not last, this was the Thursday here, that sell down. We got quite a substantial bounce, about $200 or so, and then obviously boom, it's come out and it's filled and completed, taking out that wick. Now, you could sort of say that, okay, yep, and I've covered this a couple of times, that sort of like if this were shares or stocks or whatever you want to call them, and you saw things close on their lows or on their highs, you assume, okay, well, there's no sort of pushback on it. They're selling, they're selling, they're selling, bang, and you'd expect strong continuation. And look, there's a chance. Obviously, there's a very big chance for that. We're very much in a sell mode here. However, just for school, sort of a little bit of sort of pause for thought, is the idea that one, even as I'm sort of writing this, I'm also sort of seeing a little move here. We've got a little bit of a negative divergence happening in this last move here down. Like, this is not sort of like, things can stay oversold and overbought for a long time. So if this RSI was still dribbling down the bottom here, very much I'd go, yep, okay, that's it. But as it is just in this particular point here, we do have a little bit of a negative divergence. This is on the 4 hour as well. So look, it'll take a couple of steps to unpack this, but I think there is some sort of method to this. So negative divergence here. And we're seeing this with obviously with this RSI pointing up down here as well. So obviously negative divergence, most people know what it is, but just very simply, price is pushing down, diverging to the RSI, relative strength indicator, buying pressure is actually pushing up here. Yeah, it's curling over, and most of the time I say disregard the last 4 hour candle of a week. It doesn't matter what you're trading. Not too many people are at their desk, and it's a bit of, whatever. But we could say that, okay, so in this whole sort of move down here, yeah, 23%, boom, strong continuation, expected to be going down. Okay, that's fine. the fact that this actually, if we sort of look at this in a sort of another sort of idea, so we say through, what was this last move that I was looking at? This last, because obviously we found a little bit of support through here. If we look at this last move here, I'll make this one grey just so you can tell the difference of them all. Or maybe I don't. Okay, I'll make it white. If we look at this in the sense of this last little move down, and the reason I pulled it from this point here is because obviously that was the first sell down, and then we started to get the second sell down, and so this is the Thursday move, which was really the larger of the two moves. We had the first little drop, hit that first level we were looking at, second big drop, okay, and now, so we're trying to ascertain how strong is this move coming down here. We know overall, because if we take it from the higher anchor point up here, well, 23%. So sells are definitely still in control. If we take it from this point over here, and you could say, look, it's a bit of an arbitrary point, but to me, it's, as I said, it's a justifiable point, and this is where I'm taking it from. We can see that it obviously came up, kissed the 61%, and we're back down to the lows. So to me, it's sort of like if you look at the overall move, yes, still bearish, but as we get into the latter part of the move, so if you sort of take it as in, you've got kind of, that's one part of the move, two parts of the move, three parts of the move, and then this bounce is obviously part of this move here. So that's your fourth part of the move there. And I get it that it's starting to look a little bit like hocus pocus with this kind of stuff. But as I said, bear with me. The idea is really, if we're looking at this move down here, which is the Thursday move, which was the larger of the two sell down moves, with this sell down here, and we've got the wick, we've got the big bounce up, and yes, it came down and sort of closed right on its lows down at this point here. Well, this move, this bounce, and this is how you use the RSI, came up to the 61%. Now, 61% is very strong, and it's a very sort of common sort of level with retracements and that. But shorter bounces, so 38%, that's strong continuation. That means we're selling. We don't care what we get. We're just selling. That's it. We're going down, and you can expect higher continuation because I want to get out no matter what. I'm not allowing it to. There's no balance of buyers pushing up and then sellers stepping back in. They're getting out the side. Buyers can push up. There's either lack of buyers, that want to take it past the 38, or even if there are buyers, the sellers are that strong that they're just going, well, cool, I'm selling into it right now. The fact that it got up to the 61% means to me that this last section of the move through here is starting to question a little bit. Now, how it's applicable is basically not so much that sort of, okay, hey, look, now we're bouncing up, going up to the top over here, because we use this bigger fib. The bigger idea of the picture is obviously negative, moving down, but this last leg here was allowed to go up to the 61. So it just means that this whole big move coming down here, in my opinion, is kind of sort of possibly weakening a little bit. Now, what I kind of sort of feel, and again, this is, I know it's a little bit of a dribble on here, but is that for so long we were sort of seeing the market buy gold into the weekend. And this was based on the predication that we are going to have a large escalation over the weekend and then get the big gap up and bang. And we saw that, and that happened. I think the shift now has almost sort of come, like, beside the point, this isn't the driver for what sold it all the way through, but the driver of particularly what sold it into the end of this Friday session / Saturday morning, local, is that people are sort of almost sort of pricing for a ceasefire over the weekend. Now, people bought up gold for months into the weekend based on the idea that the escalation would happen. It didn't happen each weekend, and you saw the positions peel off a little bit. It didn't mean that sort of like, the move fully reverted and went back up here and undid the whole thing. No, but it does mean that the sort of last little positions that were put on here, sell, short, to sort of like, in case we get escalation and it opens up at 4,100, if that doesn't happen over the weekend, it also shows that we may potentially have a couple of those positions peel off. which when combined with the idea that, this last bounce got to 61% here, I think all in all means that we could be finding ourselves in a little bit of a bottom, short term, meaning that sort of like, we could still come down, maybe test 4,400, but I don't think we're going to 4,000 for those big drop-offs quite yet. Let's just mark a few of these out as to where we might be should these things break underneath. So, 4,300 is that next level you'd be kind of looking at there. Anyway, so after all that sort of ramble, summarized, I think we have a bit of a sort of we've got a negative divergence on this last move down. We have potential positioning short side in that for any sort of ceasefire over the weekend. And we've got that last little bounce that sort of came up to the 61%. So which shows that sort of obviously like there's a question about this area here as to how strong this leg of the move is. Because if we, just to sort of re-emphasize this point, if you look at, if you look at the earlier parts of the move, which is say this move down here, well, and again, this is all just sort of like, say that's in that move there. Get this up. Here's your first little leg drop off, bounce up. Well, where did it even bounce? I mean, it depends on what you want to call your low, but call that your low there. 23%, 38%. It's in this very sort of like, small area, and then it took out the lows. And obviously we saw strong continuation. Now this time it's been allowed with price, whether this is sort of like lack of sellers that still want to sell it down here, or maybe it's some extra push up of demand of people that want to buy it down here. It bounced 61% of this last leg down, which to me kind of shows that it's a different to this part here. This was the start of the move. Everyone was desperate to get out, desperate to get out. This, because it's gone up to the 61%, is a little bit more of a question mark. And because it's a bit of a question mark with a negative divergence, I think the potential here is to sort of just find a little bit of consolidation around this area here. So that means that obviously it doesn't sort of mean that we're going back up over here, but it means I won't be sort of shorting more into the start of the week. I think the potential for a bit of a range to fit through here could give market sort of pause to think, and that we could see a bounce back up towards say 4,700 or so. I mean, this is a big range. You know what I mean? Like you kind of sort of think, well, look at this. It looks just a small little part of it all, but keep in mind this is like $200 or so, 4,500 up to 4,730. So, it's certainly, look, it is coming down. We did have that third close. It does have all the hallmarks of a continuation. But as I said, I think if you unpack these things a little bit more, I think, filling the wick, that's an objective. We do have an actual sort of support level that it has sort of closed on, not able to actually push through. And also there's another little one here, which I call, I've coined the name of this. It's called a frog stomp. I don't know why I came up with that name, but whatever. See if I can find some other sort of example of this, because there's been a couple of times where we get this particular setup. Okay, I can't find some. Could maybe be something like this. No, I probably should have been more prepared. But anyway, the point is the frog stomp is a wick and then the next candle closing on its lows in that same area. So no continuation pushing through, wick, bang, and these I have found, although I didn't sort of find any examples to show right this second, has been a bit of a sort of at least a sort of temporary bottoming kind of setup with it all. So incredibly strong sell down here, big candles, close on the lows, all looks like it's done. We're oversold completely on the daily. We got a negative divergence on the 4 hour. We had that bounce to 61%. I would be reluctant to be shorting this thing on open. However, should we get a bounce back up towards, say, 66.60, towards 67.30, these kind of levels over here, I think that's a much better level to be looking for shorts than to sort of be chasing this thing off the open. All right, just a quick look at this on the weekly as well. Mate, that is that is just insane. It's I mean, look, last week I had all my price targets through these levels. I think it was 48.80, 47.80, and 46.80, and this thing absolutely, mate, that is a big week. That's what probably the biggest. Is that the biggest weekly sell-off we've ever had? Kind of is. Well, in the sense of biggest body, open to close. I mean, obviously this is probably bigger, and then you had that went sort of through 2 weeks. But look at the size of that body. Whoa. But again, look, a lot of people looking at these things, they're going to be going, oh man, they just see how much it's sort of going. Give us a top wick and then take out the lows. That's your way down lower, I would think. I just, yeah. I've seen these things too many times where it just looks too obvious and then it reverts around. Doesn't mean you can't wick, but I mean, even here we see this one closed right on its highs, obviously wicked up and then big reversal down. So I'm as I said, I'm just cautioning sort of shorts too early on this one here. 44.91. Wow, crazy. Where are we off that from the highs? He's over $1,000 off the highs, $1,100 off the highs. All right, cool. Let's move on. Let's have a look at silver, because silver is another one that's absolutely getting sort of whacked here. And this is on the weekly. Let's work our way down. Oversold. Did close down way underneath this big support area, underneath this level over here. There's not a lot standing in this thing's way as to sort of coming back down to these 50s levels. And it's funny because like I put a number of posts up through this period here, and it's amazing. Like I've said this a time and time again, I'll stand by it. Like silver people are just insane. Like they just, particularly through this period here, they're just like, no, it could never go down, never go down. It's Bitcoin 2020, 2017, all over again. They're just sort of they just don't understand the concept of, but it's going up. I just bought it and it went up. There was a cool was one of those funny memes where the guy's like sort of looking at himself in the mirror, and it's like, yeah, it's not because it's a strong trend. You are an awesome trader. It's like, yeah, well, this is the time to sort of show if you're going to be an awesome trader. Well, I mean, it's looking pretty ugly, to be honest. It is. Um, anyway, same sort of thing. Look, it's closed right down to the lows. That's on the weekly. It's not really super actionable. Did close on its lows through the 4 hour. This one a little bit different to gold in the sense that gold, this is the daily here. Gold obviously closed and filled that wick and sort of moved down. I just think that this has probably got a little bit of upside, if not more down, before more downside than that. Look, it's obviously incredibly ugly coming down through here, and you can see once this level gave up here around this 80s level that we're moving down, boom, 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 boom. Again, drop it down 4 hour. I thought we would have had a bit more of this move here, to be honest. I thought this would have sort of come up here to sort of squeeze out a couple more people first. So look, cells are very much in control here. The 4 hour actually looks like it's pretty happy to sort of come down a little bit lower. I wouldn't be surprised if it does fill this wick, to be honest. 65.50, just sort of like gold had sort of filled that wick and moved down there. But again, I don't know, maybe I'm just sort of being a little bit reluctant. I think it's safer to, and this is probably the smarter thing in that sense, is to not chase this thing after it's just come off. I mean, as I said, look, in one direction, this is from up here, where are we? Sort of, came down 27%. Jesus, this is insane, these levels, man. 27%. Since March, so what's that, 10 days? So in 10 days, it lost 27%. Jesus, mate, that's crazy. Anyway, so, wow, there's a lot of drawings on here, so let's kind of clean this up a bit. Look, I still think that we could see up over here before we see down over here, put it that way. I'd be reluctant to be shorting into this. It did, as I said, if you disregard that last candle here, which I know you can sort of say, well, it's part of the price action, but it's the last candle. I've said this for years, that the last candle, the real people aren't at their desks. It's potential that sort of positioning for, the weekend. It did look like it was trying to hold this level through here. it does look like there was some sort of little form of a support building here. And yes, it closed on its lows, but as I said, if it was shares or stocks, then you'd go, yep, well, bang, definitely going down lower, and it can still go down lower. But as I said, for me, I think potentially you fill this wick 65.50, and then you see some sort of bounce here. And I think sort of gold and silver will both be sort of ones that we can sort of look at each other, each of them to sort of get an idea about what's going to be happening. Because silver, will lead the charge in terms of percentage, but sometimes its move can be a little bit of a sort of a canary for gold and vice versa as well. So it's important, obviously, just to be watching both. And I'll actually sort of have a quick look at the gold silver ratio in a second as well, because that's obviously another sort of good indicator with these things, and also the US tens. Anyway, so let's have a look. So I think so certainly these are your kind of levels that I'm kind of looking at here. You're looking at 74 top side, you're looking at where are we at? 69.50, and then I think down at this level here at 65. They're the three levels that I'm kind of looking at the moment. Bottom here, if we find this, I wouldn't be surprised. I would be probably looking for a little bit of a bounce. If you can get above 74.50, then I think we can still see this move play out. So let's move this over to here. Something to this effect, to that, and that. And of course, these are all just levels. They're not necessarily timings. But should this thing break up anywhere around here, should we get some sort of squeeze, maybe you got some stops that have been trailing it all the way down here. You put your stops above here, that gets squeezed. You still have this big falling resistance to deal with. So I do think any sort of potential sort of move up to the top side is definitely going to be met with some selling. But again, it's just, I think sort of structurally, depends how much they want to get out of this thing, but I think structurally, a move up to here to squeeze out a couple of these people and get a proper retest of these levels over here would probably be a little bit sort of better. Like again, if you're going to sell this thing to 50, do you want to sell it from 80 or do you want to sell it from 65? You know what I mean? So it really sort of depends on the demand of this thing. But again, look, if we look at these last sort of moves coming through here, this one came up to the 50%, and that's of the full move coming down through here. So where was that Thursday? Just to sort of match it up. Bounce, I think it was about here, wasn't it? And we move. Yeah, that must be there, because that's where the Thursday came from. Anyway, hereabouts. 78%. So as you can see, it was quite a sort of decent bounce in regard to this. Actually, almost just got up underneath this sort of level here before it sort of pushed back down here, which to me kind of, again, if you look at these things, so this, see it as one move coming down through here, whereas if you're sort of looking at this move over here, where we get to here, I suppose that's 50% still, but strong continuation. Anyway, bit of a dribble on. Same thing with gold. I'm not sort of looking for necessarily sort of like to be chasing this thing shorter. Look, if it does get a little bit of a push down lower, that's fine. Watch what happens underneath 65.40. I wouldn't be surprised if we do get a little bit of a bounce though, and if we can get back up towards high 70s, that's when I'll probably be looking to probably add a little bit of weight to a short side thing here. I'll probably I will get down onto lower timeframes to see some sort of confirmed failure around this area here. But if we can get a push up to 78, I don't know, that's another $11 up from where we are right now, but it's not happening Monday morning. If we can get some sort of push up over to these levels over here, that's where I'll be looking to sort of short. I'd feel a lot more comfortable shorting it from up here than I would be from chasing this thing at its lows at the moment. All right, let's move along. We've got the dollar, and the dollar is a bit of a question mark at the moment here because we had obviously super strong close to last week. We get on the weekly, you can see this sort of stuff a bit more. Got up here, and then obviously started the week quite poorly. Had its attempts, but unable to actually sort of do it. So look, I don't count the dollar out yet, but as a weekly thing, you got to see this as for what it is. It's a little bit of a question mark over this. Now, even if this thing is to be, let's clean this up a bit. Even if this thing is to be a top, you'd still see an upside here. You wouldn't see straight downside from that. The candle wouldn't form like this. You probably, at best, best depends which way you're looking, would be most likely a sort of move up potential sort of like, test of the highs over here, if this were to be a top, and then a sort of push down, take out the lows, and then continue down. That would be your way to sort of dollar failure here. In terms of a daily, I mean, obviously it's had two attempts here. It's dribbling back down here a little bit. I could still see this thing sort of cooling off a little bit down towards maybe sort of 98.70, and then sort of maybe getting one more rally attempt here. I want to see one more attempt up into this 100 zone, and then a rejection from there to say that, okay, nah, I'm just going to have a deeper pullback here, because the market will only sort of have so many that, like, it'll second attempt, and then you could say, okay, yep, that's it. But we're talking about major breakouts here. I think sort of a third attempt should be warranted, and should that fail, then I think the market will get a little bit, oh crap, and they'll peel off a little bit further. So I'm still sort of interested really in this kind of area through here. I think that's really what's going to give us. Breakout box here. That's what's going to give us a bit more direction. And the reason I put this thing here, which is obviously in the middle and lower than these highs over here, is because you've got this falling resistance. So if you can get above here, you get above this falling resistance, and I think that could be your time to sort of go, okay, yep, it's cool, it's up. But if we get some sort of move up into 100, like this, whoops, and then a rejection down, I think that's 1, 2, 3, nah, and then you'll see the market pick up a little bit of speed to the downside. Look, I'm not sort of, that's not my base case. I do think the dollar is probably going to break out, but again, I'm just reading what the chart's doing at the moment and how I'd like to sort of see this. And as you can see, I thought this may have sort of come back down here first and then sort of come up over the top over here, but that's still generally the plan. The idea that we sort of bounce around through this area here. So below sort of like, 98, sort of 60, 98.50, this area here, I think we sort of maybe could see some cooling off. But any move down to here, I do expect to be bought up in that and have one more attempt over here. So I really want to sort of see what happens around this 100. If you have a third, as you can see on the 4-hour here, it's a bit clearer. If we have a third attempt to sort of get above and it comes in yet again with a lower high, a third rejection from the 100 area, that's when I think the market goes, oh crap, and they sort of bail off a little bit. As it is at the moment, there's not really much to sort of say about it. Look, it got sold off pretty hard here. This is a bit more sort of ECB driven. It was a big week for central banks and that. We had everyone basically, BOJ, BOE, BOC, the Fed, RBA, and the ECB. So it was a big week in central bank sort of stuff. But all that stuff kind of gets pushed a little bit back with all the sort of Middle East sort of situations and that going on at the moment. But anyway, so point being with this is that it's really in a bit of a questionable no man's land. I mean, we could drag this out. This has been a level that we've been using for a while. Probably goes back to these sort of levels over here where the market was selling it. It's danced around it a couple of times, support, it sort of questioned it a little bit up over here. Now it's holding around this level here. So I know this isn't exactly the sort of like the greatest analysis in that at the moment with this, because it is just in a little bit of a chop zone. Obviously, look, the whole general idea, left to right, bottom to top, bullish, yes. But question is this, how many times can the market say, yep, we're breaking out, without it breaking out before you start to get a little bit, people sort of shaking in their boots and going, oh, actually, hold on, wait, maybe not. And look, that means that sort of should a breakdown under here, doesn't mean the full game's over. It means you come down, close the gaps, and then maybe you have another attempt. But it could push that whole effort back a couple of weeks. So it won't be necessarily, like, this is a bit more of an overview opposed to sort of a sort of actionable plan sort of come Monday. But what I am kind of looking for sort of through this week is basically probably a little bit more chop around this area here. But at some stage, whether we go down first and then come up, or whether we open and go straight up, this is the area that I'm kind of looking for. A test of here, regardless of how we get there, whether we go there straight away, whether we have a sort of, remember start of last week was sell down for 2 days, big rally up. What if we have the same? Monday, Tuesday, rally up, that kind of thing. Or do we sort of continue this little bounce here? Again, you forget the last candle here, but, if it moves straight into it and fails there, then I think that's it. So regardless of it all, whether we sort of go down or go up come Monday, I am going to be positioning and looking for a dollar push into 100 and really sort of paying attention to what the market does from there. Because I think if we fail here, I think, there's a good chance we actually have a lot deeper kind of correction, say back to 97s, close the gap, that kind of sort of stuff. But should we break through, it's a dollar party, and that's it. That's got to be the major breakout. But regardless of it all, I do think that we are going to sort of be coming towards 100. So that's where my main sort of focus is for the dollar. All right, tick along. We've got Aussie, and Aussie very resilient, very very resilient. And of course, we had a bit of data out this week with RBA and obviously the jobs and everything. I do still think that now that that's out of the way, plus the sort of unemployment percentage picking up a little bit, I think it's taking a little bit of shine off the Aussie. Look, all in all, it is still very much at its highs, doing a large consolidation. Remember, we had that large consolidation down here for ages. That's even bigger. But, we are really sort of still just holding up, holding up. I do have a short position still on Aussie. I am still looking for 69 cents as a short-term target. I do think that we can get down to the 67s, particularly if we do see that dollar rally. However, you got to respect the idea that it is holding very resilient at 70 cents. I mean, you've got the sort of psychological barrier. Yeah, that's good. It did sort of get that big bounce up here. That was when we had the sort of dollar sell-off due to, I think it was Netanyahu or something was saying, hey, look, they're going to step in and help open the strait or some crap like this. But, the fact that you can see this quite clearly here with this last sort of push up here, it's not a negative divergence, but quite a solid push up, found sellers exactly on point, technical level of the break level there. I put this out on the video on Friday. That was the breakdown level of this big rally effort here. Completed that, sellers came straight back in, and then obviously we saw this pile down towards the end of the week and that. And obviously, if metals continue down, you're probably going to see Aussie down as well. But look, for the time being, we can whack this in here. We can say, hey, here's a little sort of a little area that we're certainly seeing the market try to hold it above. But I think should we see sort of 69s, 69.90, 69.80, whatever, underneath these wicks over here, I think should we see a break of this structure down, it doesn't mean game over, but I could definitely see some movement down over into sort of mid 60s. We do have this sort of trend coming from back over here, which I think could also sort of act as sort of like a bit of a bounce point. So meaning that I think if this thing does sort of break lower, the fact that it's held so strong up over here, and now that there's a question mark over the dollar, like for weeks, I've been very sort of, yep, dollar breakout, dollar breakout, dollar breakout. As I said, we've had 2 attempts, both of them being smacked down. I'm giving it one more. Aussie seems to not fully believe that it's going to be breaking out as of yet. And if we see Aussie hold this level over here, and this includes a move down to say 69.50 or so, if we see it hold around this area, so you can still have some downside, but if it holds cooler above 69 cents and the dollar fails, Aussie's going to rip back up over here. And we're just going to see a larger consolidation like this. So I think this is really kind of it's still a bit of a sort of, as you can see, it's more or less just sideways. Some nice, definitely some decent little swings that we could trade sort of through here. But the fact that it just won't get down is, because I'm short, is very frustrating. But as you can see, it's sideways. I mean, you could be long or short; it doesn't matter. You're going to be frustrated unless you're sort of jumping in and out of these things, which I typically do. It's just this one. I was like, I jumped off gold a little bit too soon, and so I'm like, oh, you're not going to get me with Aussie. And as well as I do, shoots up 100 points. All you can do is laugh. Anyway, I do think we have some downside here. I think this is going to be the sort of play that we see the dollar have that third attempt. We see Aussie down into this 69 area here, and this is what's either going to go like this, or it's going to go like this down here. And if we see the dollar break out, then I think we could definitely start to move down a little bit lower. Should the dollar have a third attempt and fail, as I said, as sort of push right back, I think that's when we're going to see that kind of trade come out here. So for me, it's kind of like I do think that even though this thing held here, I mean, we could start to sort of rally around here. Depends how market opens with the with Aussie on with the dollar on Monday. Because as I said, look, the possibilities that we see a bit of dollar weakness early week. We saw it last week. If we see that, well, Aussie will just range between 70 and 71. But as I said, I do think that we will get a push up with the dollar at some stage before we have a final decision on what it's doing. And this means that if it comes early, then we could see downside with the Aussie. If we have a little bit of weakness, then Aussie could bounce up here first and then sort of come back down, which means you could even just be looking at something like that. So it really is kind of like important to sort of be seeing what the dollar's doing on a broad base, because obviously Aussie's not part of DXY, but we're talking about market broad sentiment towards the dollar. If they start to sell the dollar early in the week, then most likely we get a push up, but there will, in my opinion, be a rally effort with the dollar, which will be a make or break. So I think it's a very crucial week for the dollar, to be honest. And I think sort of if we see that fail, then I'd be looking for probably buys to sort of at least take it back up to the 71, 71.50 level. Should the dollar break out, well, then I think we're headed lower to 67 or so. But my conviction isn't as strong this week as it has been, or felt it has been, the last couple of weeks. One thing with the Aussie as well, if you look at this on a weekly, this thing really looks like a top here. Look at these sort of candles there, but I'll point out something, because look at these wicks over here, right? So here's top, like top wick, little body, top wick, little body. This is your textbook almost of rolling over. It fires up here. Look at how much pressure is selling this thing down. This is an ugly chart. That's a very ugly chart for a weekly. But the thing is, this thing needs to get the actual follow through. So, what I mean, it's gone up, taken out all the stops. That's cool. Should see this thing follow through, bang, and it just didn't. And it came up again, boom. So you've obviously got people trying to sell this thing. We're equally met with people that are happy to buy it up. I think the dollar is going to be what sort of decides this thing. And as you can see, so should the dollar break out, then I think we definitely could be coming back down to fill some of these areas over here, 60, 67 cents kind of thing. But if the dollar fails a third time to sort of get out, then I think, all these people that are buying this thing, buying it up, buying it up, buying it up, I think that's going to be overrun. And then I think we could actually get a little bit higher. Maybe not necessarily like a big, massive breakout high, because I do think the dollar will break out. But as I said, it could be pushed back off a week or two, whatever, a little period. So that could give time for Aussie to sort of still get up into the 71, 72 cent area before the dollar tries to rally and then sort of come back down here. So it's not as high a sort of conviction. As you can see, very much chop through here. It's just consolidating at the highs here, really. But I do think sort of should we get under 69, then 67, and there's a nice little 2 cent trade down there. But for the time being, you can't really sort of pick it either way, because I mean, each day is different here. A big engulfing here and then slapping back down. So not a great deal to take away from it. All right, let's get back to actually getting some notes done for our wolf. All right, and finally, just kick along. We have Aussie yen, and this is another one that sort of look, it's starting to sort of form this little descending triangle here. We actually have 3 lower highs. This is a very pivotal point here. This sort of 112.40, 112.40, 112.50 area. As you can see, held, and now underside holding here again. This is a crucial point for the yen, for the Aussie yen here, because we were really sort of butting up along this sort of a lower sort of side of the channel, which has been respecting since back in December. So, 3-month channel. It's really sort of dribbling down towards it, though we've seen this a number of times, and it looked like it was going to come down, just keeps firing on. Certainly, I think underneath sort of 111, then, maybe some fluffing around first, but that opens the door to 107 for me there. And obviously, we'll probably see the Aussie dollar come off at the same time if that were to be the case. If we do see the dollar fail, we may see Aussie across the board pick up, which means that you could see this thing potentially shoot up here a little bit more. But for me, it's kind of like these are the directions here. You're sort of coming down underneath 111. Oops, underneath 111. Oh, not that. Let's try it again. Underneath 111. Or above this falling resistance here. I think that's going to give us our direction, and that'll come in at the same time should this thing rally up a bit here. So let's just got a thing for keeping these levels just the same, so just sideways there, bang. I think they're your kind of levels that I'm looking for direction. Above 112.50 again, takes you past this falling resistance, takes you past this little horizontal, opens you up for potentially sort of, a continuation, 114, 115, continue with the channel. Or we do see this thing break a little bit lower here. But this I'm starting to feel has a potential for a fairly decent 100-ish kind of point. Like it's starting to pinch up here a little bit. So I think between this sort of like break of this almost sort of triangle that's starting to form through here, I think that'll sort of give us our direction. I think there's probably a couple of 100 points in this thing either direction. Certainly at the moment, 3 lower highs, technical lower low here, right at the sort of channel support. It does favor the idea that we're going to be sort of coming down, but this is obviously just one part of the move. If you look at the whole thing, we're obviously super bullish. So yeah, it'd be very interesting to see which way this goes. But I think below 111, above 112.50, that'll give us our directions. All right, quick look at the data here. What have we got coming up this week? I got Pal, speaking 4:30. Very odd sort of time. Very odd sort of time. Anyway, so yeah, we got literally nothing on Monday. Is this correct? This is very odd. Anyway, whatever. So literally no data on the Monday there. It's not even like bank holidays or anything like this, so it's very odd that we don't have anything happening. Anyway, we've got PMIs, everything's pushed off onto the Tuesday apparently. So yeah, big sort of a lot of PMIs sort of coming out through the week. Look, typical sort of stuff. This isn't really market moving at the moment, in my opinion. It's the war and obviously all the rates and everything are a big one there. We are seeing a bit of a mix of these sort of things here with services and manufacturing sort of flipping around. But still, once these are both above 50, that's still expansionary, which is positive for the dollar. Okay, Wednesday we got CPI for Aussie. Now this will be a little bit more interesting because obviously inflation is a big factor, and if they're expecting a hold, basically well, a hold, flat level of inflation, I think if this thing sort of pushes up higher, again it adds to that Aussie strength because while they're not really sort of like they're certainly not in any cut mode, they're in a very much a sort of a hike kind of mode. It was 5-4 in terms of the rate decision. So, anything that sort of, adds to inflation is going to go, see, we really need to step on this. Adds to the hawkish side of stuff, and that'll sort of keep the Aussie dollar bid. Now, the flip side to this, and this is where it's important to understand all these sort of things, is because inflation requires a higher interest rate, a hike, a hawkish approach. Jobs are the thing that, okay, do we balance it? Jobs weren't an issue. High inflation, jobs good, GDP good, okay, hike. Everybody thought it, and they did. Now you've got to sort of weigh in the fact that, hold on, wait, we are hiking, back-to-back hikes, and unemployment's starting to creep up. How high do you want to take unemployment? Do you want to push it to recession? It's funny, you watch these people sort of when they're talking about, oh, you can't say that word. But, strong economy. Look, we are. GDP is still sort of pushing out there and that. But, unemployment is ticking up, as we saw with the percentages this week. Now, if inflation comes down, doesn't have to come back to target, but if we see it tipping, as in cooling, plus inflation, plus unemployment is ticking up, then you've got more of an argument for, well, look, hey, inflation's coming off. We don't need to hike anymore. It's actually having an effect on the jobs. The percentage is pushing up. That's pushing more into the hold camp. Because why would you want to hike more? If inflation's coming down, it's doing the desired effect. Jobs, you do that at the expense of losing some jobs, and we're seeing that happen. The unemployment is going up. Why would you then want to push that even harder? You know what I mean? Yes, okay, you get back to back to target with inflation quicker, but again, then you've got to say, hey, are we going into recession? So it's a balancing act in that. But certainly, if we get a cooler CPI this week with unemployment percentages ticking up, there's going to be a big argument for, hey, we're restrictive enough at the moment. Most likely, we're going to be looking at a hold, at least at the next meeting, which is going to be negative for the Aussie. And this is partly of what we could be looking for a weakness in Aussie back down to 67 cents. Okay, ticking along, we've got the pound CPI, where they at 3%. So yeah, Aussie, yeah, number one. Moving forward, nothing really of note here. Unemployment claims just quite low last week. I saw 205. So yeah, they're doing quite well over there in terms of sort of that sort of band bracket there. 230, 240 is when they start to go, ugh, but definitely around 200 is fine for them. And that's about it. So pretty quiet on the data front, which is probably standard sort of thing, because obviously we had quite a busy week in terms of all those sort of central bank meetings this week. So really the eyes will be on sort of Middle East situation, see if there's any sort of de-escalation over there, because all these things kind of take a bit of a backseat for at least for a knee-jerk reaction. If we see a de-escalation, golds and metals are probably going to drop, and we're going to see Aussie rips. That's just my feeling. Okay, that's it from me.